Welcome to the Fintech One-on-One podcast. This is Peter Renton, Chairman and co-founder of Fintech Nexus. I've been doing these shows since 2013, which makes this the longest-running one-on-one interview show in all of fintech. Thank you for joining me on this journey. If you like this podcast, you should check out our sister shows, Pitch It, the Fintech Startups podcast with Todd Anderson, and Fintech Coffee Break with Isabel Castro. Or you can listen to everything we produce by subscribing to the Fintech Nexus podcast channel. Before we get started, I want to tell you about the many opportunities you have to reach the Fintech Nexus fintech community outside of our main events. We do regular sponsored webinars on a variety of topics. We also produce in-depth white papers. We have advertising opportunities within our newsletters, website, and podcasts. We also do sponsored blog posts, dedicated emails, and much more. If you want to reach a senior fintech audience, then please contact sales@fintechnexus.com today. We have a special treat for you on today's show. I am delighted to welcome Nigel Morris, the co-founder and managing partner at QED Investors, and Rishi Varma, the managing director and senior partner at Boston Consulting Group. And the reason I have these two gentlemen on today is that QED and BCG came together to produce what I think is one of the most important reports in fintech that we have seen in a long time. Basically, it's taking where we are today in fintech and extrapolating out where we're going to be by 2030. And there's actually a lot of optimism with this report. And let's face it, fintech in general for the last 12 to 16 months has been pretty negative. There's been a lot of negative talk. There's been layoffs. There's been companies going out of business. What this report does is sort of shows us where we are today, but then shows us where the trajectory we're on, where we're going to get to, and talking about 6x the size globally that fintech is today by 2030. And we break that down. We break it down by region. We break it down by vertical, and we talk about the what is going to help us get there, the challenges that we're going to have to overcome to get there. We talk about the profitability of this industry and how we're going to become more profitable. We obviously talk about valuations, but this is a report that was really grounded in rigorous analysis, and that'll come through as you're listening to the show. I hope you enjoy the interview. Welcome to the podcast, Nigel and Rishi.
Hello, sir.
Right.
Hey, Peter. Thanks for having us.
Of course. So let's kick it off with some introductions and a little background. I mean, Nigel, most listeners will know who you are, but I still think we should give a formal introduction, a little bit about yourself and QED.
Yeah. So, Peter, thanks for having us on. Great to be teaming up here with Rishi from the Boston Consulting Group. Very excited about this conversation. I'm a managing partner and co-founder at QED Investors. We are a global fintech investor, 200 companies over 15 years, 4 billion under management, 28 unicorns, really very focused on this space from seed all the way to later stage. Prior to that, I was president and COO of Capital One for 10 years, co-founded it with Rich Fairbank. And before that, like Rishi, spent some time as a strategy consultant. So really happy to be here.
Okay. Thanks, Nigel. And Rishi, I think most people know Boston Consulting Group, but tell us a little about yourself and what you do there.
Yeah, thanks, Peter. So, I'm a managing director and senior partner at BCG, the Boston Consulting Group, based out of the US, of course. I grew up as a software engineer, so my heart is more on the tech side of the fintech. While I love the overall aspect of, what fintech is bringing to market, but the disruptions at the core of it is, from a tech perspective. And, that's where I find my passions lie more so than anything else. Of course, working closely with my colleagues that focus in the financial services industry in particular, this is the combination of, the FI practice within BCG and the tech practice coming together and really taking a point of view on an industry that we are so excited about the future of and, the level of disruption that's possible. And we believe is going to happen, in the next decades to come, makes us really excited about it. And me personally, I feel that, being part of this evolution or revolution, if you will, gives me a lot of energy. And, hence when the opportunity presented, I jumped on it. And so really excited to be here today.
All right. Well, excited to have this conversation because this is all, obviously, we're coming together because of the report that came out earlier this month. We're recording this in late May, and it's titled "Reimagining the Future of Finance," and it was really just an amazing report, and we're going to dig into it deeply over the next half hour or so. But before we do, I just want to just hear about the genesis of this report. How did it come together? Why did you decide to do it?
Let me kick off on that, and then Rishi can engage on it. Look, we were going through the process of a lot of really in-depth conversations with our investors at QED, and we found them asking a very trenchant question, which was, look, where are we in this revolution or evolution? Are we the early stages, chapter 2? Or are we in the later stages? The low-hanging fruit has already been taken down, established, and the incumbents will now dominate. Chapter 8, and they were asking that question. Why? Because they, I think, were seeing the long arc of digitalization taking away friction, some of the benefits and the powers that young startups bring to the table to break through, but they were also seeing, just the pessimism, shall we say, and adjustments in values, public and private, across tech for sure, and particularly in fintech, and therefore we're asking the question, where are we? And I thought it was just an amazing question. And we reached out to BCG and said, look, can you help us think this through? I mean, your analytical firepower, your perspective on worldwide financial services is uncontested. And look, let's partner up here. We have a unique insight into what's happening at the sort of molecular level with small entities and where the breakthroughs are coming from, and BCG has this enormous big picture. So we started chatting, Deepak and Rishi and Steve Throgmorton at BCG, and it came together really quickly. And we said, okay, let's take a run at this. And what was marvelous was in a really relatively short period of time, we really started to get our arms around that chapter 2 versus chapter 8. So I think, and I really believe that this report is actually dripping with optimism and dripping with a long-term perspective, which is sadly not out there in the media as much as it should be, because the longer-term trends are, in our view and in the report's view, inexorable, and we're going to see enormous growth in fintech over these next 7 or 8 years to 2031. And two, we quantified a number of things in this report that I think many of us knew intuitively, but we didn't really ever get our arms around the specific numbers. And when you start to stare at those numbers, and I'm sure we'll get into them, you really go, my golly, the opportunities are massive.
Right. So Rishi, when was this, and how did sort of BCG kind of, how did you kind of decide to get involved?
Yeah, Peter. And so, we, as always are looking to find innovative perspectives on the industry, and in particular the financial services industry, and where the puck is moving. We have a wealth report, we have a payments report, and many other things. And we just felt there was a massive vacuum from our perspective in the dialogue around the future of fintech, and just, the power of disruption that we were seeing in the market relative to how fintechs were, disrupting the market, the rise of Web3 and crypto and many other elements in there. Neobanks and payments players and lending players, etc. Just, a real fascination for how this market was evolving. And we thought, we needed to take a perspective. And, as we were starting to construct that perspective, it was really, really amazing timing that, when Nigel and team also reached out and we had that connection, we said, oh my God, this will be just the most amazing thing to bring both perspectives together to really drive an objective point of view on the market. And what we did that, not just, of course, QED as a co-author and a co-collaborator here, but we wanted to be objective. We spoke to a number of different VCs. We spoke to many incumbents. We spoke to, a number of CEOs of leading fintech companies to get different perspectives, just globally too, right? Not just a North America point of view, but, many of them across different geos to say, all right, what is an objective quantitative view of the market, and especially forward looking. That was one thing that we quickly identified as we looked at all the different reports and perspectives that were there in the market. A lot of it was, talking about analysis done on a kind of look back basis, trying to explain where we are now versus where we think the puck is going. And, what is it that we are going to see the overall arc of this industry, as Nigel suggested earlier, is going. Again, while we don't have a perfect crystal ball, but I think we've taken a pretty, quantitative fact-based view to where we think this, what the art of the possible can be.
Right. So it sounds like there was a quantitative session, piece of it and a qualitative piece with the interviews. But I want to, before we get into the guts of it, I want to just sort of put the lay of the land out there, because as one thing that I'd never seen before was the size of the financial services industry and the size and where fintech stands within that and globally. So maybe we could start there and just talk about maybe Nigel, you can give your perspective here on how big are we talking about?
Let's start with some basic sort of building blocks of the edifice of financial services. In many countries, we see financial services, and we're defining banking and insurance as 20, sometimes 25% of GDP. Enormous. And if you compare the size of financial services with other major industries and verticals, it's often the biggest or next to the biggest across any geography. Two, the study points to the fact that revenue across global financial services, again, banking and insurance, is $12.5 trillion. Yes, with a T, not a B, a T. And it's just an incomprehensibly large number. And the profitability from that $12.5 trillion is $2.3 trillion. And a way of putting that into context is I went back and looked at how big the $2.3 trillion the profitability is vis-a-vis the size of various countries. And it's bigger than the GDP of Italy. Mm-hmm. So it's an extraordinary number, and it's just absolutely massive. And when we started to peel the onion on building up from different fintech, platform by platform, and doing it, building it up in a very, as I said, a sort of atomic basis, we found that the revenue from fintech against that 12.5 trillion was 245 billion, if I remember right. Rishi, you're nodding.
That's right.
So which means that fintech revenue as a percentage of total revenue is a whopping great 2%.
Right.
So, in some ways, the Chapter 2, Chapter 8 question is almost resolved when you look at those numbers. 2% penetration. And the study, and Rishi can go into this, I'll let him take it in a second, but the study projects forward how the growth of fintech will accelerate vis-a-vis the growth of the incumbents. And that 245 billion going forward, we think will go up by 6x, if I'm not mistaken, to 2030. So that's just, so it's going to go up by an X basically every year, if you like. So I thought these numbers were just astounding and gave me, and I do have a dog in the fight, even though BCG did not, was just reaffirming and corroborating the fact that we are just at the beginnings of an enormous change that's going on in financial services.
Right. So Rishi, those are big numbers. I just want to, how did you come to those numbers? Can you at least give me some methodology? Because we're talking about revenue here, and obviously, much of financial services are, they're public companies with publicly available financials, but fintechs, plenty of private companies there. I'm just curious about the methodology in arriving at those numbers.
Yeah, Peter. And so, as you can imagine, within BCG, working with many of the incumbents, we track pretty closely all the revenue that is available in public domain relative to each one of the in the markets and by segment, right? So we have a really good point of view on just as proprietary data that we maintain within BCG is those revenue pools, and we track them pretty closely based on available information. In addition to that, we do have public data on some of the fintechs that are publicly available, and then we looked at penetration rates relative to that in all the different segments, and we extrapolated different leading fintech companies and their impact within a certain segment, and we extrapolated that, made some assumptions around that to come up with the overall penetration numbers by segment, where it stands today, and then how we think that is going to grow relative to a growth model of where we think the overall segment's expected to grow over the next 10 years, and then what share of that is going to be for fintech Peter. So that was broadly the methodology that we used.
Right, gotcha. Okay, so I want to talk about that growth a little bit, but before I do, I want to go back to sort of where we are today. Because we know people talk about the fintech winter that we are in, and obviously funding has dried up for fintechs compared to where it was certainly in 2021 and earlier. And we also have, there's been, I think the public companies are clearly, being valued every day, it seems, at a lower valuation than what they were, just even a few months ago. So it's, I'd like to sort of, maybe Nigel, you're following this, and obviously you're still investing in the space. Where has the slowdown in funding been most dramatic? When I'm talking about what stage of funding?
Yeah, I just want to just riff just a second off what Rishi said. We broke down into a series of arithmetic assumptions that we stared at each of those assumptions for intuitive validity and historic growth rates, and then you multiply them through to get to what you think is going to happen. And we could quibble about whether or not fintech is going to grow by 4x or 8x over the next 7 years, but the momentum and the pace, I think, is very hard to contest. So, there was Rishi pointed to this. There was a lot of science and a lot of art that went into pulling something like this together. So it was a thorough, complete, and really sensible piece of work. So but let's go back to because we have in the QED's history, we've been investing now for 15 years in. Specifically in fintech. And when Frank Rotman and I began this journey, there was no such thing as fintech. We were just applying Capital One style heuristics to early stage companies. But so we had 13 years where everything basically went up and to the right. Mm-hmm. And it was a wonderful time. I talked about them being the salad days and the glory days, etc. But and then what happened is that we had these last 2 to 3 years have been a series of shocks to the system. Let's just diagnose them a little bit. So first of all, COVID happened, and then we thought we were going to go into a very deep and awful recession. I mean, 3 years ago, we were all worried about our own health, and there's not many of us that have not had COVID touch our lives or the lives of loved ones in palpable ways. So we were worried about that, but there was enormous government reaction, injection of liquidity into the system, and we rode it out. And what happened at that time was fintech took a step function in its adoption. I point to a company like Remitly, where I'm on the board, a public company, and we led the A stage so many years ago. People did not want to queue up at Western Union at a time of COVID, and they realized that the mobile phone was a wonderful way at a lower price with better customer service to send money from developed to developing countries. And they did it in droves. And they got over the inertia of moving from an analog model to a digital model. And that phenomenon occurred in hundreds of different situations across financial services. So then we saw the growth started. So then we had everybody beginning to jump on the bandwagon of, look, fintech is a real thing. These companies are really exciting. They're growing at dramatic rates. They're creating breakthroughs all over the place. And that led to a whole new cohort of investors that came into the space, often motivated by FOMO, who bid up the valuations dramatically, and diligence effectiveness compressed dramatically. And we found that the valuations of these companies went from a 5 or 6 times revenue before all this happened to 20 times revenue. And these were days when capital was cheap and plentiful, and we saw an enormous injection of liquidity into the system. And like all things that feel so good for a short period of time, it started to come undone. Putin invades, supply chain disruption, everybody's worried about inflation, interest rates start to go up, capital becomes more expensive, capital becomes less available, and many of the people who were jumped out just as quickly as they jumped in. And with that, we saw the winter emerge. And I think that understanding and chronicling that, and I'm sorry it was so long, chronicling that the last 3 years is really important to understand, because these are relative short-term perturbations against the arc, the long-term perspective that the study points to, which is inexorably there's going to be a move to digital. Inexorably there's going to be a focus on inclusion of customers that can't have access today or don't get access easily. And with the friction that's involved in analog and traditional delivery is going to be whittled away over these next 10 years. Anything that's analog or anything that is paper-based is going to come under siege through digitalization. And with that, new data sets emerge. With that, customer performance satisfaction improves, efficiency goes up, and lots of opportunities to embed lending, payments, and insurance. So, and we find, and maybe I'll pause here and let Rishi take it from here. But I think we find ourselves at that arc, that 3-year period now looks like it's coming to an end, and we now begin to build back up to what was a sense of normalcy and equilibrium 3 years ago. And I think there's evidence that we're moving in that direction.
Right.
And just to add to that, Peter, maybe just 2 data points that could be helpful here. Very specifically as we analyze, the funding, flows in some of these different companies at different stages. Clearly, the late stage companies are hit much greater, with Series C and D getting impacted by over 50%, and Series E even more than that, closer to 70-75%. Early stage, on the other hand, continues to stay resilient. As long as you have good unit economics, have a good kind of product fit story, I think there's still value to be had in that space. In addition to that, just one other thing that was interesting, as we were looking at some of the valuations come down, and also kind of funding, being much more tighter, we still saw revenue expansion within the fintechs, which was really interesting to say, like, while, we may be coming down, some view of, extra exuberance, but the core fundamentals where, these companies were being, focused, there was still uptake and, revenue growth in that. So that gave us a lot more confidence.
Right.
Yeah. A lot of the companies that had those very high revenue multiples were positioning themselves as tech companies. You heard Rishi talk about how his software background says he leads with tech. I think a QED, we tend to lead much more with fin than with tech. But they were particularly the ones that went public. They were positioned as tech companies when they were really balance sheet companies.
Right.
And I think that led to a substantial inflation in the underlying valuation multiple. But we had 5 companies go public in 21 at QED. We had SoFi, we had Avid Exchange, we had Flywire, we had Nubank, and we had Remitly. Now, if you look at them en masse, they've all come back substantially from their lows, at the end of last year. Nubank is trading, as we speak today, nearly $7. It came out at $9 a year and a half ago at the IPO. They've beaten their numbers handily, and they dropped down to 3.5. So they've doubled. Remitly's at 18 now. It was low. It was in the sixes last year. So profitable growth companies, and I underscore profit. I think the market is rewarding profitability now substantially over growth, particularly in the later stages.
Right.
That the market is beginning to respond to that.
Right. So I want to go back. I want to talk about the growth of the industry globally. You talked about $245 billion. And again, that's revenue, actual revenue today. And you said it's going to grow 6x, which when you do the math is around 1.5 trillion, which is, a pretty substantial number. Maybe, Rishi, do you want to just give us a sense of how this growth is going to be distributed globally? Because there's obviously some geographies that are much more advanced than others, and I imagine the growth will not be even.
Yeah, that's a great question, Peter. And, I think that there is a great story to tell. Well, I think North America has been leading the charge to date, and I think will continue to be is going to continue to be a major player in the growth of overall fintechs. But we think APAC is what, including, the whole breadth of APAC is going to take the lead over this time period, over to up to 2030. So we expect APAC revenues to grow to about 600 billion, which is going to be 8.5x, 8.5x, where they are today. Notwithstanding, I think, starting from a higher base, North America is going to continue to grow and, will be almost a $500 billion industry by 2013 with a growth of 4x in there. Geographies like LATAM and Middle East and Africa are also going to be, promising in terms of their growth, though for much lower base as they are today. But, we see as access requirements continue to grow, especially if you're thinking some of the underdeveloped economies in Africa, et cetera, access is going to be a key thing. And I think fintechs are going to play a key role in helping drive in financial inclusion and general access overall.
Right. So then what about within verticals? Obviously, payments and lending are the two largest verticals today. Where is the growth going to come from? And are those verticals just going to continue to dominate?
Go ahead, Rishi. Give it a shot.
Yeah, listen, I think, payments has been the headline story so far in the fintech space, right? And payments has been leading the way so far. Almost 40% of all revenue, all fintech revenue today is payments based. And, these are payment solutions. But we see this shift over the next 10 years. Not to say payments will not continue to be a significant portion, but I think there's going to be a shift towards, what we're calling B2B to X and B2B kind of focused companies that are, going to be core infrastructure, as enabling companies to, what we are going to call B2B companies that are infrastructure related, and other companies of as such that are going to really help build the fabric of the financial systems globally and help drive that. But in addition to that, we think companies that are going to serve what we are calling B to small b, which are kind of small businesses, SMEs that dominate the globe, they are quite starved for being served by, some of the incumbents today, and they are served quite poorly. And I think this is a place where we think fintechs are going to step in, especially as you think about the greatest needs around credit. And lending are going to be big areas of focus for, the small businesses around the globe that dominate the economies of many countries. And I think, especially even in the emerging markets, in Asia or even in Africa and others, these are the small businesses that are really going to drive the revolution. And I think fintechs are going to be core to that equation.
Right.
I can just shoutingly agree here that we're the opportunities for breakthrough companies are, I think, across the full vista of lending and payments and wealth management and deposits and prop tech. And as we start to look into crypto and the blockchain. I think that all of them have different shapes and interest levels depending on certain geographies. For example, in India with UPI, it's very hard to make money on traditional payments. In the US, because of Durbin, we have a whole series of neobanks that can make money purely with a deposit-based debit card. So I think that there are opportunities across the board. The second theme is that inclusion and giving access, particularly on the consumer front, but also with SMBs, as Rishi said, is enormous. Even in the US, it's very hard for half of America, with people with a FICO score of under 650, to access credit. And certainly the banks, by and large, do not serve that population. And if anything, in the last 6 to 9 months have actually pulled back from serving that population. But that phenomenon is massively amplified as you go into new geographies. As you go into Brazil, we see Nubank. As you go into India, we have OneCard and Jupiter. As we go into Indonesia, which is still massively open field running and the fourth largest population in the world. So embracing financial inclusion with debit and credit and then into wealth management, I think has enormous potential. The last thing I'll say is that so much of what became fintech, Peter, was driven on the back of mobile technology and the move to digitalization through mobile. We're going to see there's a series of meta trends in terms of technology that will fire up the next generations of fintech plays across the verticals. We had a lot of talk about generative AI now. The opportunity, we're just starting to get our head around how massive that can be. API-based connectivity, particularly open banking, particularly in Europe there. But a lot of entities attempting to become the super app model. Distributed ledger and the blockchain. A lot of promise there, and that's starting to take shape over the next 6 or 7 years. Quantum computing and the cloud dropping expenses, and then lastly, embedded finance, where anything that's logistical that is paper-based and analog becomes digitalized, and then with that, the opportunity to be able to embed lending and payments and insurance. I think we're just scraping the surface there, and I think that it's a lot of excitement in the QED ranks about all these opportunities.
Right. So I want to dig into profits for a minute, because you mentioned it, Nigel, there's more of a focus on profitability now than there has been in the past. And I'm always struck when you look at the earnings reports that come out and you look at the banks, and they're making astounding profits, particularly recently. And whereas the fintechs still seem to struggle, they're doing better than I think they have, but a lot of the publicly traded fintechs still are losing money. Where do you think, or I'm just really curious to get your perspective on when is fintech going to catch up? Because you look financial services, you mentioned the profit. It's a highly profitable industry, but it's really the traditional incumbents that are making most of that profit. When's that going to change? And how is that going to change?
Maybe I can take a quick comment, and maybe Nigel, you definitely have a great perspective on this. I mean, Peter, as you know, within financial services, the greatest profit pools lie in lending. Mm-hmm. And that business is a very different beast compared to, some of the other more tech-focused businesses, using your balance sheet, getting low cost of capital to be able to make lending products effective and in a way that you are focusing and having discipline in those lending practices that you have. Perhaps, even acquiring, banking licenses, as you know, which have become really, really difficult globally. That really has started to create some kind of barriers for fintechs to enter the space. And then, add to that any compliance overheads, regulatory oversight that you have to consider as you go into those kind of models, becomes increasingly difficult for fintechs to navigate. And so I think, but that's the challenge, and that's where the pot of gold is, as the neobanks, et cetera, look to expand their offering, move into more profitable places where they can create offers. In a way, they're going to have to consider, looking at lending seriously, because that is where the banks really make their money.
Mm-hmm. Nigel?
So much to unpack in that question. Well, first of all, I agree that the pots of gold, the economic rents, tend to be bigger in lending than any of the other categories. is true. And there is a structural collision between venture capital and lending. Venture capital is by its very nature impatient, and lending requires enormous patience. And I think what any fool can lend money, as I often say, and the challenge is getting people to pay you back. And we see a number of entities have yet to prove that their unit economics make sense. If your unit economics don't make sense, you can't build a P&L that makes sense. So what we're seeing, I think, in the public markets, back to your question about when will fintechs become major profit centers, is that some of them are not going to ever make money. And some of them, their business models don't make sense. And what we're seeing is the public markets figuring that out now. I hit on a couple of companies earlier that are profitable and are growing because their fundamental business models were incredibly sound and durable. So in a Darwinistic world, a lot of fintechs aren't going to make it because they didn't choose the right place to enter. They didn't have a business model that worked. Their overhead costs were too high. They didn't understand what skills they needed, and they will disappear. But that means that the ones that do win are going to be winning in the big profit pools where they have comparative advantage, and that's just the nature of startups and Darwinism. Every one of our portfolio companies is now really incredibly focused on a pathway to profitability because they recognize that the funding market is capricious, perhaps. It's austere. It's hard to get capital, and if you do, it's often at valuations that were very different to what they were 18 months ago. People have rationalized their cost structures massively and extended their runway. But the focus on EBITDA is absolutely right. And we will see the EBITDA will not fully realize until we see growth slow in the fintech, because marketing costs money, and I flush my marketing expense immediately through my P&L, which means that my earnings are always going to be low relative to growth. And this is this conundrum that we've chatted about, profit versus growth. But until the growth rate's slow, we're not going to see the profit gushers that you would imagine. And I would point to the fact that if we look at the banks, even though they're making loads of money, Peter, they're not growing. Right. I mean, I don't know what the average growth rate would be of banks in the US, but I would imagine it's probably in the middle single-digit range, if it's that. And probably on a normalized inflation-adjusted basis, they're probably losing revenue on a normalized basis. So fintechs are where the growth is, and until the growth slows, for certain fintechs, the profitability will not gush. And of course, then there'll be other generations and cohorts of other fintechs that will be, driving revenues and breakthroughs after the first generation. Example, we see Nubank, of course, a juggernaut, but we're seeing, sons of and daughters of Nubank emerging in other geographies who are going to go through the same cycle.
Right. Okay, so we've sort of talked a lot about the potential growth, but I want to just focus on the risks and the challenges that the industry is going to face that needs to be overcome or needs to be dealt with in order to achieve this growth. So maybe Rishi, you could just start with you and talk about what are the biggest risks for the fintech space to achieve the growth we're talking about.
Yeah, and we highlight a couple in the report there. Peter, as you think about, what is the actual potential that is achievable versus, what can be achieved in practicality. And, what I would say is, to achieve the potential, you'll have to address some of these key risks that we clearly see in the market. So, we're starting with the, easiest way. One is, as you think about regulatory oversight, for most, this growth has been, fintechs have been left alone by a lot of the regulators, while depending on the geography, there's been, in some case, reactive to, what was happening in the market versus being proactive in there. So, I think having a real, call out to regulators to consider this industry, to create a level playing field, to take a much more proactive stance. And there are geographies where that's happened. If you look at Brazil, as Nigel suggested, or India and others, where, the regulators have taken a pretty active role. Again, they can always do more, but have done so more than other, perhaps developed economies where they are creating public digital goods, infrastructure that is allowing for some of these fintechs to thrive, is a real good shining light where many others can take inspiration from that. So, the role of the regulator is going to be interesting, but the risk, of course, is of regulatory overreach, right? As you think about knee-jerk reactions around, things that happen with SVP and other situations, right? If they tend to clamp down more in terms of the oversights that are going to be needed, they can in some way impact overall innovation and, what fintechs can draw. So, we are going to be looking out for that in terms of, just for proactivity of the regulators in this space and, looking at how they may, perhaps stifle innovation in that regard. Reputation continues to be a big thing in this space, like brand and reputation, as you think about, some of the recent crypto blowouts that we've seen, that has an overhang on the overall industry and, whether, there's enough trust in the industry, if you will, in terms of people's money and, protection and all of that, and then, how that's going to play out. So, there is a cloud that, continues to stay with the industry in that regard, and we'll have to deal with some of these reputational things. We always will see one-off things in the market, but in some way we have to make sure we dimensionalize those in terms of the practices in that specific context versus a overarching theme that is industry wide, and so that's going to be an important thing too. The other element is around the role of big tech is going to be interesting, and see how they are going to continue to evolve their offers and services, as they look to leverage their scale, in this regard, and how they create infrastructure that perhaps creates greater opportunity for tech companies versus fintechs, and the role that they play is another one that's going to be interesting for us. And then lastly, it's just geopolitical tension and overall macro environment is going to, continue to play a role. And that's not a fintech specific thing, but I think that will continue to create a, headwind for us overall. But, we believe strongly there are going to be local champions that are going to emerge out of this, even within a broader tense geopolitical environment. We will see local champions emerge that are going to, be impactful in the local markets.
Right. Great. Okay. So I want to close with to hear from each of you about what you find most exciting now, because you've done all this research now, the report's out. It's really optimistic for fintech, and I think a breath of fresh air for the industry. But maybe, Nigel, I'll start with you and just talk about what are you personally most excited about when it comes to the future of fintech today?
Look, at the macro level, I'm really excited about how it can make the difference in the lives of hundreds of or billions of people in this world. Taking away the friction, taking away the stress, empowering consumers to have ownership and SMBs of their own data, making decisions that are not based on inertia or based on lack of confidence. And with that, be able to manage their own finances better, with less friction, and taking away the inefficiencies in the market that, candidly, the incumbents have been able to take advantage of for eons. And I think that at the global level, that's what I'm really that's the most exciting thing. I think financial inclusion is a huge deal. If you go to Indonesia, you go to Nigeria, you go to Kenya, and even in the US with the people who are not terribly well off. The opportunities are massive in putting really high quality products in their hands. And when you do that, you get wonderful net promoter scores. And with that, you can actually create huge value in their lives. And, if I go back to my Capital One days, it was really wonderful with Capital One, who helped democratize access to credit cards, to wrestle that power, that hegemony that the large incumbents who have not had to innovate and candidly are still struggling to innovate. It's very difficult. So I think at the global stage, at that level, that's what I'm most excited about. What in particular verticals, I think that I'm excited about all of them in their own way. They all have major opportunities. And in a sense, as an investor, it's not about this one is where all the opportunity is. It's how do you horse race an idea across one vertical and one geography against other ones at the margin. But embedded finance, I think, is absolutely critical. Lending is really very important. And if I just go back to what Rishi said, where the risks are, it's around access to debt financing, particularly as a fintech, because you don't have access to banking windows and low-cost durable deposits. And just a shout out on the regulatory front is we see so many now regulators around the world leaning in to fintech and being progressive and saying this is valuable. It creates a multiplier effect. It promotes inclusion. It squeezes out the black economy. And I think the call for the US and the developed country regulators is, look, let's not focus so much on regulating last year's problems. Let's create the opportunities to create environments where you can promote and support fintechs, because it makes our world a better place.
Mm-hmm. Rishi, last word.
Firstly, ditto everything Nigel said. You said it really well, Nigel. But just from my lens, right, I think just firstly, the unevenness of, the overall evolution of fintech, while, it's been in the US and, other parts of the world, but just to see how that is starting to spread just, globally and, in areas like, Middle East and Africa taking the lead and, other places where it's creating that inclusion really, it really warms my heart to see, the force that it can be and the force of good that it can be. And to me, that is, hugely, hugely exciting, but also, I think it's a real call to local incumbents, right? Financial services companies and others that have influence in those markets. Like, it's an opportunity to really embrace and partner, and in some cases even acquire some of these innovative companies and really see how you can, do the math of 1 + 1 is 3 and really drive that, next level of acceleration within these markets and, bring new innovative offerings to market together, as against to trying to think of this as purely as, fintechs as being disruptors. But the idea of partnership and collaboration, in the ecosystem, and the importance of these ecosystems are so important to me. Just that opportunity in itself, gives me a lot of confidence and excitement around the future of this industry. And, I'm thrilled to be part of it, and I'm excited to see the future.
All right. Well, here. It's, you guys, Rishi, Nigel, thank you so much. You've done a tremendous service, I think, to the fintech industry. And this is a seminal report that will really, I think, people were referring to again and again over the years. So thank you so much for joining me on the show today.
Thank you, Peter. Thank you, Rishi. Bye, guys.
Okay. See ya. Well, I hope you enjoyed the show. Thank you so much for listening. Please go ahead and give the show a review on the podcast platform of your choice, and go tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.